Now.
All right. Good evening, everyone. It's more evening to some of you than it is to me. It's only 5 o'clock here. And look, that says 7 o'clock in the morning. That's all wrong. So that was for the presentation the other day I did for David. So we're going to talk about the my 2022 outlook with SunnyBands. My passion is in helping beginners learn how to trade and intermediate traders. And this talk is for traders who have not yet become wildly successful or who haven't traded much and want to learn, or folks who want to improve their trading results, and for beginners and intermediates of both types. First, we have to talk about the disclaimer. It takes a little while to read this. I'm not going to leave it up for long, but basically the idea is you can and will lose some or all of your money trading. It's difficult. We all have drawdown periods. Every one of us has losing days. Some of us even have losing years. So a lot of people have started their portfolios with choice stocks, but not all people know how to pick stocks. So I'm going to use some of my proprietary indicators for this talk. And I'll teach you how to use my proprietary SunnyBands to trade futures, stocks, crypto, how I use them to trade my own account. I am a trader. I've been trading for 41 years. I trade stocks and futures both, but I do not trade options. I only know how to lose money with options, so I don't trade them. I traded them for a year and thought, well, that's just not for me. But I'm going to tell you first a little bit about myself, and I'm going to show you how I trade. So I trade the S&P 500 futures contract, the E-mini, on 1 and 5 minute charts. I am not a long-term investor. I go long and short both frequently during the day, and that makes it a lot easier to take care of downdrafts like we've had the last 6 or 7 days. The S&P 500 is the most difficult market to trade, however, so I'm not recommending that you do it, especially not if you're new. I've been doing it for a lot of years, and it is my specialty. I do have also long-term stock holdings, which are a week or more, up to 5 years. I hold things for the long term as well in my stock portfolio. And I do trade a little bit of cryptocurrencies. I use Ethereum for my trading, not Bitcoin. So here's what my charts look like. I have an indicator I call the DMA, or Dynamic Moving Average. It's the purple and gold line that goes across the center of these bands. So you can see here it says purple on top. So that means right back here, the purple line became on top of the gold line, which signaled to me that it was time to short. So right there's a place to short Bitcoin. Now, if you want to use the SunnyBands, which are built on the DMA, sorry. This is the DMAH down here, but this is the DMA in the gold and purple in the center. And then the SunnyBands are the 2 lines on the top and the 2 lines on the bottom that form a channel around price. And it's amazing how price will bounce on the bottom band, bounce down off the top band, hit the DMA. If gold's on top, it'll go back up. Then it comes down through, hits the bottom band again, and heads on back up. It only goes to the DMA because purple's on top. So that's basically how I trade it. The bands are built with two average true ranges around the DMA, which is proprietary mathematics. I am a mathematician. So I developed something that avoids most of the whipsaw that you see with standard moving averages. The DMAH, which is the histogram, H stands for histogram on near the bottom of the chart, is measuring the difference between the gold and purple lines. So when gold is on top, you see this histogram is gold and moving up. When the lines get closer together, they get skinnier, it turns red. So it's still with gold on top, but you can see that that's a good place to short because it's telling you they're getting too close, getting too close, getting too close. And there they cross over the 0 line and turn with purple on top. But if you'd gotten short back here, it would have been a pretty good time when that turned red. On the bottom of the chart, I've got a little indicator called who's on top. So it tells me just at a glance, if gold is on top, it's gold. If the purple line's on top, it's purple. That's what I use. That's it. you want to see this kind of insight, you can sign up for my free Sunday night newsletter, Sunny Side of the Street. Just go to moneymentor.com and go to, oh, I don't remember what it is, but you can pull down articles. I think you can pull down to Sunny Side of the Street and subscribe for free. I use my indicators all through the newsletter and tell you what the positions are and where I think they're going. If you can't find it, email me. I'm at sunny@moneymentor.com. And easy to reach. I'll even give you my phone, my personal cell phone number at the end. I answer my own emails. So anytime you want to get in contact with me, I'm here. Just remember, I'm on California time. And I will post a PDF of this for my members on the website, moneymentor.com. So you have to be a member, and then you get access with your password to the members area. And then you can see these slides if you want to see them later. Just quickly, I've been rated #1 trader twice with 365% and 178% profit, trading exactly what I just showed you. Rated by Stark Research, and this is for actual money, real trading money in my own account, not for hypothetical returns or for a contest. I did not do that for a contest. And you can see there, #1 right on the top. I'm a mathematician and I have a good time with photography. I love to take photographs, and I've traveled all over the world taking photographs because that's my reason to do math and trading, so I can travel. I've been programming for 52 years. I've been trading for 41 years. I started out as a systems programmer for Lockheed up in Northern California. I founded a little company with 3 of my friends, 2 of my friends, there were 3 of us. And it became the world's leader in computer graphics software. And one of the things that we did was Harvard graphics. And I retired when I was 30 years old. And I gave my money to money managers. Turned out that's a pretty bad idea to do. It took them 3 weeks to lose $75,000. And I decided I can do that badly on my own. I think I'm going to try it. And that's how I started trading. So I first started out with reading 117 books on trading. I didn't trade at all for the first year. I watched the market and I plotted charts because back then there really wasn't software to do it. I just put them on graph paper. Now I've read and have a library of 734 trading books. And I also have books listed on my website, moneymentor.com. If you want to go there, you can buy books. All the trading books are listed alphabetically, so you can see what I've been reading and what else is coming up. I published a magazine called Trader's Catalog and Resource Guide for 8 years until things became internety, and then I quit publishing it because paper is expensive and graphics is not. I've written 5 best-selling books: Trading 101, 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy, and with a friend of mine, the actress Linda Blair, I wrote Going Vegan. And now I'm writing another one, which has a long title, Easy Language OOEL Made Easy, with my friend Sam Tinnis, who is the author of Ask Mr. Easy Language and also the author of the original TradeStation Easy Language, because he used to work for them. I've written articles for most of the magazines. I still continue writing for them, and lots more. Here are the books, just so you can see what they look like. Oh, I co-authored Using Easy Language 9.x with Murray Ruggiero while he was still alive. There's the magazine I did, and there's Going Vegan, and here's the one I'm working on right now. So far, I'm up to 1,200 pages, and it'll be done in a couple months. I've been rated in the top 10 consultants and tasks, technical analysis of stocks and commodities magazine, and top 10 for courses and seminars. I do give courses and seminars, and I teach people to trade. I already told you that one. I've been a member of most of the technical associations. And there's where I was in the top 10, #3. And on my website, oh, here, if you go to books and articles, that's where Sunny Side of the Street is. Books and articles under there. So if you click on Quips out here, you can see what other people say about my services and my software. And there's my Facebook page, and I put posts on there every now and then about where I think the market's going. And so you go to Facebook and look for Sunny Harris, and you'll find my free market predictions there. And you can opt in for Sunny Side of the Street here, which you can't do very well in this presentation, but in the PDF of the slides you will. Every Sunday night I do that. And I've called directions that other people aren't calling. I went short this market when everybody else was saying it was going up. And I completely revised my website, Money Mentor, this year. So that's out and available. Does anybody know how to make a six-figure income? Well, one of the ways through trading and making a six-figure income is start with a seven-figure one. But seriously, if you want to make $120,000 a year, you have to divide. I think as a mathematician that you have to make a plan and divide things up and turn it into realizable goals. So $120,000 divided by 12 months is 10 grand a month. And you might say, well, that's pretty hard, but let's go further. 10 grand a month, 20 trading days is $500 a day, which is just 5 trades at $100 each. On the S&P, that's really pretty easy to do. So you probably all know how to buy and hold stocks, but what about futures? I'm going to tell you just real briefly about trading futures. Futures are derivatives because they're derived from the underlying asset. They're not like stocks in some way, and they are like stocks in others. If you own a stock, you own a small piece of a real company and you can hold on forever. Stocks don't usually drop to zero. Sometimes they do, but not usually. They usually go up over the long term. But if you trade futures, you're buying a contract to take delivery of a commodity at a later date. You could lose more than your initial investment. Whereas if a stock just goes to zero, you're out the money you invested. But with futures, because of the margin, you can lose more than your initial investment. If you want to trade margin on stocks, the stock has to be borrowable, and you have to know which list that is in order to short them. But you will have a margin account if you trade futures because you're borrowing money from the exchange. So what is shorting? Long is buying in the hopes that it'll go up and you can profit. Shorting is selling something you don't own on the promise that you'll buy it back later on the hope that it's going to go down. So you can make money in theoretically, and hopefully you can make money in both directions. Question you need to ask yourself is, are you a trader or an investor? An investor buys and holds for the long term. The trader gets in and out, goes long and short, hoping to get short-term profits. I'm both in 2 different portfolios. So here's an investor's chart. You buy Apple back here along 1986, and you hold it until it goes up all the way to there. With a buy and hold strategy, I've got BH, buy and hold, equals $162.25 per share. Here's a same stock on long and short trades. See the yellow dots? If you go short there, you buy back here, go long, you hold it up here, you go short, and then you get out there, and then you buy it and hold it. So that's what a short-term trader's chart looks like. In the same amount of time, the investor made $162.25 per share. The trader made $263 per share. Of course, this is theoretical. That those dots showed all the perfect turning places. So let's say you'd started out with 100 shares. As the investor, you could have made $16,200, and the trader made $26,300. Theoretically, of course. In the same amount of time, let's say you started out with stock at 7 cents in 1981 and the current price of 162. The investor made 2,300%, and the trader made 3,700% profit. That's why I'm both a trader and an investor, because of the higher profit potential in the short-term trade. And then I also hold for the long-term, for safety and long-term investment. Is it possible to do that? Well, yes and no. Did you buy Apple when it was 7 cents a share? Probably not. It was a pie in the sky dream at that time. And you can't catch all the moves. According to my research, you can only capture about 60% of each move when you're trading. So the investor must sit through long periods of scary negative markets like we've gone through this last couple of weeks. So do you have the nerve to do that? Maybe not, maybe so. The trader can always go short, because if the market's going down and they go short, then they get a profit when they get out of the bottom. So let's take a look at the Dow. This is something we're all familiar with, and it's reported daily on the news, and we relate to the numbers. So somebody tells you the Dow is down 300 points, you know what that means. In the last few weeks, though, it's been down 2879 points from its high. We all know that's a lot of points. 7.7, and this was written yesterday. So at that point, it was down 7.75%. So we're getting close to that 10% down that's bear market territory. Here's a weekly chart of the Dow, and you can see my yellow dots again, marking all the perfect trades. Those are automatically put on there by a piece of software that I wrote I call it PHW, which stands for potential hourly wage, because I want to know what's possible. And whatever I look at, whatever symbol it is, I want to know, can I make more money trading this thing than I can working at McDonald's? So that's why the potential hourly wage. Can you make 5 trades at $100 each per day? Here's the daily Dow, and you can see where it went. This is today's chart. You can see where it went right down to that 10% level yesterday and almost to it, but then recovered today. And here it is, squeezed up, so you can see it on a longer term chart. On the bottom, I have this green histogram is the dollar amount of each trade that was on the PHW indicator. So you can see the last trade was worth $29.45. Not bad. On a weekly basis, this is the Dow, and you can see it's not yet down as far as it's possible to go to hit that 10%. This orange line, this horizontal line, is something I call an attractor. I think that price is attracted to certain kinds of things, probably because so many people are watching them. This one has a 20 period, a 50 period, and a 200 period moving average on it. And you can see we went right down to that 200. That's an attractor. These Fibonacci lines that I've drawn on the chart, those are attractors. A lot of people are watching them. Price is attracted to them. So let's look at the Dow Jones and see, why did I say so far? We're going to look at the Dow on VantagePoint, artificial intelligence software. And I have VantagePoint and I use it every day. And I also give the VantagePoint chart every afternoon on my Money Mentor website for free. So you can always go there and look to see what VantagePoint said the Dow is going to do tomorrow. It did a magnificent job of calling the last several down days, even measuring the depth of them. It's predictive software, and it gives me a perspective of where things are likely to end up or down tomorrow. So it's posted on my website. And I also put it every Sunday night. I put the prediction for Monday in the sunny side of the street that I send out for free. One of the things I do every night before I trade the next day is to see what VantagePoint is telling me is going to happen tomorrow. There's a website link. If you're interested in VantagePoint, they offer a free class to teach you how to use it. So here's what last night's prediction looked like. Look how accurate that is. It didn't go as far down as the previous bar extended, and it did go up. It's amazing. Right to there is where we went. So more about the Dow. Let's look at those standard moving averages a little bit. They're quoted in Barron's and Investors Business Daily and the Wall Street Journal. They're the 20, 50-day, and the 200-day moving averages. Everybody looks at them. So they're attractors. And then I'm going to get to my outlook for 2022. So here they are on the chart of the Dow. You can see how this 50 was hit perfectly on the weekly chart. I don't think we're going to come down to that 200. I don't think that's going to happen, but who knows? Who knows in this market? On a daily chart, the same averages, you can see that's below the daily 200 moving average. And here it hit the 10% line and bounced off of that and went back up. Are we putting in a bottom? I don't know yet. No way to know. As a trader, you don't try to lead the markets, you follow along. So you know it's risky. I'm going to show you how I trade and have been forever. And if you're interested, I'll be happy to sell you my system for trading and teach you exactly how I trade it. And it's the same one that made me #1 trader twice. As I said, with actual money, not in a contest. So first thing I put on my charts are the attractors. And I coined that term to describe all kinds of S&R, support and resistance, including moving average, where price tends to revert to the mean. And the next thing I put on my chart is the SunnyBands, which I showed you. And it's based on the dynamic moving average. So here we go with some attractors. Let's see. There's the first one. This is the E-mini on a 5-minute chart. And the top here is an attractor. Shows resistance. Okay, comes up, hits there, and falls down. Next chart shows a couple more attractors that I put on there. And usually price will bounce around and try to penetrate the attractors and then bounce or either go down and then hit the next attractor. So here are the SunnyBands. And the way I trade with them is not just with this DMA that's in the center, but I follow the price from the low. As it penetrates the band and jumps up, I go up to the next band, go back to the band on the below, back up to the band on the top. It just goes over and over. And as long as it stays above the DMA, I stay long. So here, it penetrates the band. I go short. That's a losing trade. Go long again. And I said, we all have losing trades. We go short as it comes down out of the SunnyBands and follow it on down to here, where we go long again. So it just goes. It's like clockwork. It just goes over and over and over, back and forth to those bands. And no, they're not like Bollinger Bands. Bollinger Bands are based on an exponential moving average. And what's the other thing he uses? Statistics, anyway. I use average true range to form the bands. So there you go. That's the chart I look at. I look where the purple's on top or gold's on top. Little gray dot in the center means that the DMA was sideways during that period. I don't like to trade sideways periods. And here's how I choose stocks. I don't short stocks, as I said. I buy and hold, and I wait for a sell signal in order to take profits. So this next chart tells me at a glance which stocks are above the averages and whether my DMA is bullish or bearish and what the potential profit is. Lots of information in this thing. I know it's very busy, but I read it at a glance because of the colors. So you can see right, where is it? In this, the pink and light green tells me which stocks are bullish, because you see if Apple at that point on a weekly chart had 3 greens in it. So it means it's above the 20, above the 50, and above the 200. So I'm looking for stocks that are all green if I'm going to invest in them. Over here, this is my DMA telling me whether it is, these are the same colors that are on the DMA histogram, the DMA-H. So red means it's bullish now, but it's turning down. Gold means it's very bullish. Purple means it's bearish and going down. And green means it's bearish, but it's turning up. So I can just sort on these things, double click on the top, sort on them and see who's who and what's what. The yellow out here is the PHW, potential hourly wage dots. I sort on that to see which the most tradable stock is. And I can read buy and hold right here, how much you could make if you buy and hold, and how much is possible to make in the ideal by trading the PHW dots. So it just gives me everything. Those are the 3 moving averages. This is the DMA. And this is the PHW. So let's look at the three moving averages just for a minute. We're looking for all three moving averages to be green. So Apple, Chevron, Coca-Cola, McDonald's, Merck, and Procter & Gamble are all green as of last night. So we're going to take a look at these charts in a minute here. Apple is below its 20, hitting, no, it's below the 50, heading for the 200, but it's still green on a weekly chart. I had those charts all weekly. That was a daily chart. So on the weekly, it's still bullish. And then if we look at the VantagePoint prediction, you can see that last night it was predicting that Apple would go up somewhat today. I don't know what happened. I didn't watch Apple today, but there's your prediction. Chevron on a daily chart is above, looks like it's even above the 20 there. It's above them all, so it's green. And on the weekly charts, you can see it's definitely above them. It hit this attractor that goes across on the Fibonacci lines. It says 0%. You can see that it hit that attractor. I don't know, maybe it was repelled by that attractor today. I didn't take a look yet. Here's the VantagePoint prediction. Up. Anybody know to chat with me if whether it was up or not? Anybody watch that? Coca-Cola, another strong stock. On the daily chart even, it's above all three moving averages. You see, I've got the numbers out here on the edge to tell me which moving average it is. And on the weekly, definitely bullish. At its highest right there, if you measure from this low to this high, you can see where the Fibonacci lines are. If it retraces, it's going to go back down to 58. And there's the prediction, both down and up today, mostly up from yesterday's low, but that was the prediction for today. McDonald's looks like it's below the 20, below the 50, and above the 200. So it's still bullish on that other moving average. On my DMA histogram, I would have gone short right over here. And with the PHW dots, that's where the short is, right there. And you can see it went down from there. The purple's on the bottom like this. You can see on the bottom line it's purple, and on the histogram it's purple, which means to me that that was a shorting opportunity right at that yellow dot. On a weekly chart, we see the same kind of pattern. Looks like it's getting rough going over through here. It was long when the gold, and then short again right out there. And VantagePoint's prediction, up and down for today. That's probably what most of the market's predictions look like, because that's kind of what the market did. Merck, daily chart shows me that it just touched the 20 moving average. I've got it. This vertical line, I'm sorry, but that one's done by the 200, which is off the chart. I should have scaled that differently to get it on the chart. Mark's weekly chart. I have head and shoulders on this thing. Shows a head and shoulders happening over in here, which is pretty volatile. And the VantagePoint prediction, up and down again. Excuse me while I take a little drink here. All right, Procter & Gamble. Above the 200, above the 50, and right on the 20 on a daily basis. So we've got to break out of this high for it to be continued bullish in my book. But that's what it looks like. Soap. On a weekly chart, it's above everything. Has to break out this 38.2% Fibonacci line, and then it's moving on up. VantagePoint prediction, same story again, moving up and down at the same time, which is probably what everything did today. Well, this is earnings season, and all the news is scary, and everybody is afraid that something's going to happen with interest rates that's going to make the world change. So there's a lot of a lot of fear going on in the market right now. So the E-mini, we're going to do the same thing for the E-mini. Margin at today's rate is 11,880 per contract. There used to be a contract called the big boy. It was just called the S&P. And nobody trades the big boy anymore. They all trade the E-mini, which came into being in September of 1997. And I started trading in 1981. So I was trading the big boy from 81 up to 97. And I was trading 20 contracts at a time back there. And the margin it was $50,000 a contract. So that's, you can see I had a lot of money invested in when I was learning to trade that thing. But it's not as recognizable as the Dow. So if I tell you that the E-mini is at 4,300, what does that mean? Nothing to most people. But it's the most liquid commodity. And you can look at the chart in the back of Stocks and Commodities magazine every month near the back. They put a liquidity chart, and the E-mini is right on top all the time, which is a lot of the reason that I trade it. It is the most liquid. It's the easiest to get in and out of. If you trade lumber and there's nobody in the pit trading, was what they used to say. I'm sorry. How are you going to buy? How are you going to sell when you want to sell if there's nobody there to sell it to? So on a daily chart, this is what the E-mini looks like. Oh, my voice is getting rough. Sorry about that. So the 10% down mark is right here, which we broke through. 20 or 15% is right down here, and 20% is below that. There are reasons to think, as the speaker before me said, there's reasons to think that the bottom's in. It's acting as if it's been bottom fishing the last. Here yesterday, it dropped down really low and then bounced right back up. That's the kind of thing you see in bottom fishing, but I don't know. I don't have an opinion. I just follow it. So on a 5-minute chart, it looks a lot different than that. On a weekly basis, this is what it looks like. And you can see it dropped right to that 10% line, which is also, you see, I've drawn a horizontal line here. That's the attractor, which just meets, it's just under the 10% and right at the 61% on the Fibonacci line. On the NASDAQ, look at that drop. My goodness. Right over here is the yellow dot that says short. And you can see what happened after. It dropped under the, that's a daily. So it dropped under the 200-day moving average. It's following these SunnyBands down. You see it's between these two bands all the way down through here. In order to turn this thing purple, which is the purple lines on top, so this is purple. In order to turn it gold, that's going to have to slow down, go sideways, form a bottom, and turn back up. So I'm not, on a daily chart, I wouldn't be buying the NASDAQ yet. VantagePoint prediction for the NASDAQ for today was from the close of yesterday, down some more and up some more. And that's really all there is to it. I look at the attractors. I look at the VantagePoint prediction. I study my dynamic moving average, see if it's purple or gold. And I watch the SunnyBands to see which side's being followed, the long side or the short side. Again, I trade the E-mini on the 1 and 5 minute charts. So I usually trade about 5 times a day. Yep. And when I buy equities, which I've got a large portfolio of equities, I buy and hold for weeks to months and even to years. If you're interested in my work, I've got a YouTube channel. I post videos there on how to use things. And what else? The last piece of the puzzle is that every night before I put away my trading tools and go to bed, I consult VantagePoint. I look at the gray bar on the right of the VantagePoint chart for tomorrow's forecast. And I study all those indicators that I just showed you. So you can see yesterday the moving averages on VantagePoint are moving down, 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 and price was moving down. There's my website again. All the products that I developed and programmed, I am a programmer as well as a mathematician. were all developed for my own use in my own trading. I didn't create these things to sell. I created them to make money with. And I do make them available to you, and I show exactly how to use them. That's where you go. It's go to moneymentor.com and click on the order form. And I don't hold anything back. I tell you how they work and how I use them, and no secrets. So here's my order form. You can see prices on the order form, and further on down from there, you can see indicators. You can view charts of each of the indicators and see what I'm looking at. And a special offer for people who have attended today, thank you, David, is if you order before the end of this week. Now, I don't normally give discounts. I just almost never give discounts. The only time I give a discount is in October of every year. And I give 25% off in October. But for this meeting, if you order before the end of this week, I'll give you 20% off of all my indicators, anything you want, indicators and strategies. And if you buy them as a package of several, I'll even give you a little more off than that. I'm raising all my prices March 1st. I haven't raised them for 9 years, and it's about time to raise them up and catch up with this inflation a little bit. I don't know about you, but my grocery store is 30% more expensive than it was last year. Or if you want to wait for a few weeks and order it by the 15th of February, then it'll only be 10% off. And that even includes my consulting and mentoring time. If you want me to program for you or teach you how to trade, that's also included in the discount. If you want a 7-day trial of anything I have, they work on multi-charts and TradeStation. So if you want to do that, let me know. Here's my cell phone. Give me a call or shoot me an email. But I do need your customer number so that I can program that into the software. Let's see if we have any questions in the chat room. Do I have it? If I'm saying that the S&P market's a difficult one to trade, why do you think that? And what markets are easier to trade in your own opinion? Why do you stick with the S&P if it's difficult to trade? Well, I thought as a mathematician that I could solve the puzzle. I mean, that's simple enough. I just thought I could figure it out, and I've done a pretty good job. I've stuck in there for 41 years doing it. This is what I do for a living. I retired at 30, and this is what I do. It's difficult, but it's liquid, which means it's moving. It's not, there are no gaps really to speak of in the S&P. It moves smoothly up and down all day long. I stick with it because it's the thing I know and it's the thing I do well. Easier things to trade are currencies, which tend to trend. Any other questions? Hi, Silver. So there's no such thing as a stupid question. Thank you to David and Anka for hosting the event. I really enjoyed talking with you. And thank you for your attendance. And here's my contact information. Don't hesitate to call. Is that it? That's it.